If a donor or an individual finds himself in a situation where they have highly appreciated securities, it's a win-win, because that donor can go and contribute their securities to a charitable organization, and then in doing that they will avoid any tax that is paid on that appreciation, and also receive a charitable deduction that is equal to the fair market value at the time of donation.
Well, it's a great thing to do, especially if you're looking to be charitable. That's the start. You want to be charitable. There's sort of two ways to give. There are many ways, but two ways you can think of. One is just giving cash. How do you get cash? You could sell your securities and donate the proceeds. Problem is, there you end up with tax to pay. You're paying capital gains tax, and the proceeds diminish, and what you can give to charity shrinks. So an alternative is to donate the securities directly to a charity. You do that, you get a deduction for the fair market value of the securities, which is great. And then the charity gets the securities, they sell them, pay no tax. Charities generally don't pay tax, and therefore have the entirety of the proceeds to use for their charitable cause.
I would not recommend donating depreciated stock because, again, the benefit here is that the donor can avoid the capital gain tax.
So you have stock that's gone down in value below your cost. You can sort of do it in the reverse way. You sell that security, get advantage of that capital loss, which you can use against other gains you might have, and even carry forward that loss if you don't have gains in the current year. And the charity will get the fair market value again. The charity gets all the cash that you sold it for, and because it was depreciated, there's no tax concerns. Nothing's coming out of that value. So the charity gets the cash, and away they go.
So for a charitable deduction of assets, typically, then that is 30% of their adjusted gross income. So you look at your form and say, okay, well, let's say that I have $100,000 of adjusted gross income, and so my deduction would only be up to $30,000. But all is not lost. So if they donate more than what they're able to take as a deduction during that year, then that charitable deduction is able to carry forward for the next 5 years. So they still will continue to receive the benefit from that donation.